Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about JF SMARTINVEST Holdings Limited annual report. JF SMARTINVEST Holdings Limited offers a diverse range of businesses and services through its subsidiaries. At the core of their operations are online investment, decision-making solution services provided to clients in the People's Republic of China. The company provides various financial software sales and services, including market data processing, data analysis, and investment decision-making support. They also offer cloud chart viewing, pre-recorded online investor education courses, live streaming broadcasts, express market reviews, and indicator analysis tools. These premium services cater to high-end clients seeking advanced investment solutions. In addition to financial software sales and services, JF SMARTINVEST Holdings Limited is involved in various other businesses. These include media promotion, multi-channel network operation, operation energy services, information and technology activities, value-added telecommunications business, audiovisual network services, and production of radio and television program services. JF SMARTINVEST Holdings Limited market capitalization of $14 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that JF SMARTINVEST Holdings Limited holds a significant advantage in their industry. JF SMARTINVEST Holdings Limited trades at a higher price-to-earnings ratio of 13 times and a higher price-to-book ratio of 5.14 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 58% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 2.73%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The net income of the company experienced a significant increase over the past year. According to the extracted summaries, the net income rose by RMB 649.5 million on page 4, representing a substantial growth rate of 238.5% compared to the previous year. This indicates that the company's financial performance has improved significantly. On page 17, the net income increased by an even larger amount, with a rise of RMB 12,821 million. While the exact reason for this increase is not explicitly stated in the summaries, it suggests that the company's revenue growth and cost management have contributed to its improved financial performance. Unfortunately, the extracted summaries do not provide information on how profit margins changed over the past year. This data would be useful in understanding the underlying factors driving the company's net income growth. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided information, the company has successfully generated significant amounts of net cash from operating activities. As stated on page 19, the company achieved approximately RMB 824.2 million in net cash from operating activities as of December 31, 2025. Furthermore, this is corroborated by a specific figure mentioned on page 44, which confirms that the company generated RMB 24,999 in cash from operating activities for the year 2025. These figures demonstrate a substantial increase in the company's ability to generate positive operating cash flow, indicating a strong financial position and potential for future growth. The company's debt level has undergone significant changes in recent years. Specifically, the non-current debt, which includes lease liabilities, has decreased substantially. The total lease payments have been reduced by 50%, while the present value of lease liabilities has also seen a notable decrease of 49%. This reduction in debt is a positive trend for the company. In terms of interest expenses, there has been a significant decrease as well. The interest expense on lease liabilities has decreased by 27% from RMB 1995 to RMB 1,455. This reduction in interest expenses will likely have a positive impact on the company's bottom line and overall financial health. Overall, these changes indicate that the company is successfully managing its debt levels and reducing its interest expenses. The company's performance can be broken down into several notable areas. On a regional level, Shanghai stood out as a strong performer. Within this region, fintech partnerships with companies like Suntime, Tencent Cloud, and Nonconvex also contributed to the success. In terms of specific segments, VIP products such as Stock Navigator and Super Investor showed significant improvement following AI empowerment and quantitative tool upgrades. Additionally, investment research capabilities were consolidated and strengthened across the board. While revenue growth was observed in all areas, no specific details are provided for individual segments or regions. Management is optimistic about the company's future prospects and has outlined several key strategies to drive growth and maximize returns for shareholders. The company plans to upgrade its AI stock diagnostics to provide more personalized and professional investment decision-making assistance, while also establishing an intelligent compliance and risk control platform to streamline business operations. In terms of financial management, the company aims to optimize its debt and equity balance, expand its user base, invest in content development, and strengthen its financial foundation. This will enable the company to maximize returns for shareholders through a combination of cost savings and revenue growth. Looking ahead, the company has set its sights on exploring new models for digital asset investment, with a core strategy of AI plus research by 2028. This ambitious plan is expected to drive innovation and growth in the industry, while also providing opportunities for investors to participate in emerging trends. Finally, management has recommended paying a final dividend of approximately HK 168.5 million, representing HK D0.36 per share, subject to shareholder approval. This demonstrates the company's commitment to returning value to its shareholders and rewarding their investment in the business. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has paid out significant amounts in recent years. For the year ended December 31, 2025, the proposed final dividend is HK $168.5 million, on top of the interim dividend of HK $138.9 million. In addition to dividend payments, the company has also engaged in share buybacks. In 2024, it repurchased a substantial number of ordinary shares, totaling 17,730,000. This demonstrates the company's commitment to returning value to its shareholders and managing its capital structure effectively. That concludes the financial summary for JF SMARTINVEST Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.